This is Ron Brown. This is a list of stocks that was posted on a CanSlim bulletin board. These are stocks for review. What I'm going to do is show you how I would go about looking at this list of stocks in HGSI. First of all, I'm going to do Control A to copy this list of symbols. Control A for Control All, and then Control C for copy, and then I go into my user groups. I'm going to click on a folder to make a new user group, and I'll call this Stocks to Consider, and then I am going to paste the list. Every stock is automatically selected and it goes into the list. I'm going to go ahead and generate an index for this list of stocks, and this is going to be a market cap weighted index of the 227 securities. Okay, actually 226 with the index. So I'll bring this index up in a chart, and this is one of the charts that I've created and I use. But let's go to some different charts here. I'm going to go to my HGSI index charts and just pick out a couple of these charts to show you what's going on. Now this particular chart shows us a percentage of the 226 stocks that are above their 20-day moving average, and you can see that this line has been falling. The same for the percent above the 30-day and the percent above the 50, and above the 200 it's still relatively strong, but you can clearly see deterioration in this group of stocks. So obviously there are some stocks here if I'm playing the long side, and by the way, the market is really in a period now where it's looking for direction, but there has been weakness. But I'm more interested in the positive stocks only, so I'm going to limit what I look at to that. Let's take a look at a couple more charts here. This right here shows the internals from last Thursday, and what I want to point out here is that on the VPA best fit trends, the long-term trend is still up for this index, but the short and the medium-term trends are down as this index rolls over. And if you look at other indexes in HGSI, you're going to find something similar. In fact, I'm going to divert myself here and go into my broad market indices, and I am using a view called the top-down analysis VPA scorecard trends. And if you look at these three columns right here, you'll see the best fit trend long, medium, and short, and you can see that many of the indexes that I track are in downtrends. There are some that are still positive. The utilities index has remained positive. This is only a few stocks, so there's only 15 stocks in this index, but that's where the money has been flowing. You can see that the NASDAQ is still NASDAQ 100. The best fit trend, the long side is still green, but the intermediate and short term have rolled over to the downside. So we're in a market situation where the indexes, most of them are looking for direction. Now remember, this Trump rally began with the financials, and if you look at the financials, you can see that this is clearly deteriorated. Its high was back here in, looks like on the 1st of March, and it has been drifting down since. Maybe a better look at this would be to look at accumulation distribution based upon the A versus the E's, and actually this window right here shows me the A and B accumulation, which is represented by the green line, and the D and E. Still positive, but the accumulation has turned down on the A plus B, and the D and E has turned up. So it's certainly lost momentum. Now let's go ahead and go back to that group that I created, and it's up here. Under stocks to consider, I'm going to just click through to that, and I'm still sorted on my raw combo, which brings the strongest trending stocks to the top of the list. And you can see that Momo is at the top, followed by a PAM, and then Beat, Fizz, Wix, VRTX, and so on. This is the place that I would start to take a look. There's no need, if you're looking at the long side, to look at stocks that are below the index. And if I click on my spacebar, index is already in here. If I click on Find First, it goes down to number 132 out of 227 here. So it's anything above this index based upon this combo ranking is stronger than the index. So there's 132 candidates. I'm sorry, that's 131. The index is number 132. So how do I find the best candidates? Well, I could just flip down, start flipping through charts, and I'll go to a standard chart that I use. That's not the one I want. This is a chart which contains the 18, the 50, the 100, the 200-day exponential moving averages. It is my fan chart. When all of these are stacked properly in the correct sequence, that means a long-term trend is intact. And on Momo, if I put my crosshairs up, you can see that the fan originated right here at the same time. There were some pocket pivots, and it was going from a negative to positive on my expansion contraction. Now this is expansion contraction is the 18-day exponential moving average versus the 50-day, and as these widen, this histogram will of course have higher peaks in the histogram. Also down here, this is my volume point of control indicator, the 10 period. When it goes from rose to green, that is a buy trigger, and the force indexes are also based upon price and volume. They're at the top of the list. So Momo has been in this long-term trend based upon these moving averages from back at this point, and it was trading for 23.16, then pulled back. You can see that it pulled back to the 18, which is often a support line, held here at the 18, and it's holding again at the 18, or it held at the 18 and it broke out, but it's running into some resistance now in this market. And also this line right here is represents the group that Momo is in, and you can see that the group has been struggling, and it's actually turned down the last few days. So Momo is trying to continue up, even though the group has come down. So these are many of the things that I look for. Let's just look at PAM. This is another stock. I'll open this up so we can see that it's a utility network, and once again the fan was formed back in this area. You can see that the 18 held, which it often does, and it has moved up sharply, but it is stalling a little bit as the group is coming down also, pulling back, and but the volume is light. Now, in case you don't know, these flags or these symbols in the chart are VPA flags, or volume point analysis, which give us an idea of the demand and supply in a individual stock or index. It really doesn't matter. And let's just move down to the next chart. Beat, this is a stock that has been in a long-term fan from this point right here. You can see multiple pocket pivots as this stock has moved up. The blue lines represent a bullish pocket pivot, and the rose lines represent a bearish pocket pivot. But there have been a mixture of pocket pivots here. The most recent one was on this day on the gap up. You can see it ran into some selling at this point, but it's holding above the buyable gap. Now, once again, the group is starting to trend down. beat held above the 18 until this point right here. It came down, but the 50 held, and notice all these VPA flags right here indicating that this was light volume selling, and then a confirmation of that light volume selling, and the stock took off again. Now I'm going to eliminate some of these stocks. I'm going to go to my view here. Since I've explained what the fan is, I'm going to go into these are views that I've created for my insider club, and I'm actually going to go down here to the number 4 folder called growth stocks, and I'm going down to number 12. These are stocks that are in this fan formation, and they are growth stocks. The growth stocks filter that I use is 20%, well, right here, the EPS change is 20% compared to the same quarter 1 year earlier, and the previous EPS has to be at least 20% compared to that quarter. So you can see that all of these stocks meet that requirement if you look down these two columns. So this cuts it down to 97 securities. I'm going to make a subgroup of that with the alternate G key, and I'll call this growth stocks in fan uptrend. I'll go ahead and generate this index, and let's see if we can locate that. I have to take my filter off, it looks like. Growth stocks and fan uptrend. So it's down here at the bottom. See how this looks, and you can see that this is a strong view as far as the fan. Everything is in the correct order. So I'm going to work with this list right here. So here's where I am at this point. I have a group of stocks, 97 of them, plus the index, that I consider growth stocks because of these two columns right here, and they're in the fan uptrend. So I'm obviously looking for bullish setups at this point. Now I'm going to go back up to, since I have the group segregated, I'm going to go up to my bullish scans up here, and I'm going to just take a look at the scorecard view. The scorecard view gives us the ERG, or the earnings per share rank, the relative strength rank, and the group rank. The three of those total up to give an ERG number, and you can see that several of these stocks have a relative strength rank of 90 and above. Anything that's green is 80 or above, but if I sort on the RS rank here, this will give me the highest ranked stocks at the top of the list. Now this 98 means that AMD has outperformed 98% of the other stocks in the database over this time period, and this time period is actually 1 year, with 40% of the emphasis on the last quarter, and then the other 3 quarters are divided 20-20-20. So let's just take a look at AMD. You can see that AMD, even though it's a strong relative strength stock, and that information is up here also, it has been rolling over as profit taking has set in. But the main thing here is the group. Look at the group line. It started collapsing up at this point. AMD was in pretty good shape until the semiconductors started rolling over, and it is going down with it. So this is not a good current setup. So let's try to find some other way to do this. I'm going to move down here to the bullish VPA signal today, and that cuts the list down all the way to 10 securities. Now these are the prices, the intraday prices on Thursday, and you can see that only 2 of the stocks were up. But if you look over at this column right here, you're going to see the last VPA signal condition. And most of these are no supply or strength seen returning after a downtrend. Don't pay a lot of attention to these numbers over here, we're going to be looking at the individual charts. Now, going over here to the trends, some of the trends are still strong. I'm using a combo rank called intraday upward momentum on this. But I'm just going to look through these stocks individually. Now here is Court. This is a stock that I've been in and out of. It's been loose. It had a nice tight run up to this point, and then it got choppy, got up here, and it failed when it tested this resistance. Stocks have memories. In other words, you look to the left. You always look to the left when you're considering buying a breakout and see if there's resistance. And oftentimes you'll see that fails when it runs up against the resistance area. One thing I want to point out again is even though this fan is in place, the group has been going down. I put a lot of emphasis on the group line. Now what are we seeing here? We are seeing a couple of VPA flags back to back. If you look over here, you'll see no supply, a sign of strength on the prior day, and then on Thursday, strength seen returning after a downtrend. It's holding the 18-period exponential moving average. So this is setting up, but once again, there is an area in here which contains a lot of resistance. So you have to be a little bit leery, but you can also see that the volume has fallen off considerably, which means the selling pressure has fallen off considerably. So I would put this stock in a watch list. I certainly wouldn't be buying it on Monday, but it is holding on less selling pressure. Let's look at the next one. Now Beat, this is a stronger stock because it has gapped up. It's holding the buyable gap, and it is generating a VPA flag today, which is no supply, a sign of strength. It is generating that because volume fell off considerably on Thursday. Volume was light on a lot of securities on Thursday, but it's fallen off. It's got a very narrow body here, but there was very little selling pressure. The VPOC is positive. The group has turned down too, but it's holding up in this area. The group is in this congestion area too. One thing I haven't pointed out yet that you need to be aware of is earnings are coming up on some of these stocks. But Beat, after holding this buyable gap up, it's in a pretty strong position. Now, would I buy this stock? Well, I would consider it. I really don't like what the market's doing right now, but I would put my stop just below this buyable gap, and I would make it, I'd put a buy stop in and make it take out at least this high and preferably above that wick. I'd have to go into my spreadsheet and define my risk and reward before I did it, but this is a strong stock that is holding up well at this point. Now, WB, don't like this one as much. Here's your VPA flag. Let me zoom out with the alternate 2 key. You can see that it's in a long consolidation mode here. It's got overhead resistance, or it's got resistance to the left. It is holding up, but it needs to show more strength at this point. It doesn't report until May 10th. INVA. Now this is a strong stock that is inching its way higher. You can see the earnings and revenue bar is moving up nicely. Here's the it's up 525% compared to the same quarter 1 year ago. Its current quarter estimate is 271.43. The next quarter is 106.67% gain. So this is looking good. Lots of pocket pivots here. It is trending up. It's above the 18. It had a negative flag the prior day, but it's holding on Thursday. This is once again no supply, a sign of strength because there is very little selling pressure. And if you look to the left, there isn't much to get beyond here in during the recent period. I mean, it's nearly out to an all-time high. So this is one I would definitely consider taking on money if I'm going to play the long side. I would make it clear this area here with a buy stop, and the sell stop would be close, depending on how many shares I want to take. This would be a relatively safe stop down here. If you're more aggressive, I would use the low of this day for the stop, and if it happens to take off, you're going to be filled with quite a few shares because your risk reward is or your risk is very narrow. Now, I don't like this one at all because of all the resistance to the left. This one is starting to form somewhat of a rounded bottom. This is ALRM. The group is going up. Oh, I wanted to point something out. I failed to mention that this group on INVA, the group is moving up, which also is one of the reasons I like this stock much better than some of the others. Let's just go through this list quickly. This has been drifting down. You're going to have some resistance over here, but it's holding. It looks like it's under accumulation. The group has been drifting down, the dotted line. So once again, I pay a lot of attention to the group, which is publishing and broadcasting in this case. Now here's Celgene, a stock that we all know. You can see that it looks like more of the stocks closed in the upper part of the range in through here. Here the group is turning up, which is positive. The VPOC is negative though at this point. If it has a positive day on some volume, that'll quickly change to green. The force indexes are both red. Once again, it's going to have to get past the resistance over in this area and here before it's very strong. United Healthcare, similar look. Group is moving down. I'd be cautious about that. Centene, group is moving down. You can see that it moved up nicely and it stalled. Where did this stall? Look over here. Here's the memory. It couldn't get past that, so it really needs some volume and some strength to prove that it can go higher. That's all I'm going to do. After going through this, the stock I like best out of this whole bunch, these are growth stocks, remember, in an uptrend, would be INVA. And if it takes that out, that would be a buy. The problem is, I shouldn't say the problem, but the fact of the matter is, any position you take, or I take, anybody who trades stocks, is that once you're in a trade, it becomes a random event. You do not know if that will continue or not. So you try to put everything in context. By that I mean you try to see what the group is doing. You look for the earnings when they're coming out. This is not too far in the future. You look for the estimates. You look how it's performed in the past on earnings. You look over here at the EPS rank, the RS rank, and the group rank. A nice ERG of 270. It's under accumulation, and all you can do is put the odds in your favor and then manage your risk. Okay, so I'm going to position size this. This is a spreadsheet that I put together for my webinar attendees, and I'm going to change the symbol to INVA, and I'm going to put some numbers in here. So the high would be the high of this day, and that information is down here at the bottom, or I can open up a window here. And the high was on the 12th. It was 1455. The low depends on what I want to use for a stop. Now, if I want to really, let's start with this one right here, and then I'll do an alternate stop. The low on the 11th was 1409. Yes, I realize it's very close, but if I use a buy stop, it's going to have momentum going away from the stop. which is a positive. And by doing this, if I want to risk 1% on the capital, and my capital is currently $50,000 for this example, I could buy 961 shares of this, and I would be risking only 3.57%. So if I change this 500 to 9, let's make it 950. You can see that down here, that's $494 that I would be risking. If I put 961.54 in here, I would be risking the full $500, but obviously I'm not going to be able to put an order in for 961.54. I could put an order in for 961, but I'm just going to make it 950. And I'm only risking 3.57%, or my original risk is only 52 cents. Like I said, it's going to have to take out this high by a couple of cents, so that means that the stop would be here, whereas the buy point would be up here, and the momentum would be going in my direction. That's why I would consider such a close stop. But let's be more conservative here. Let's go to this candle, and the low is 1352. So I'm going to go here to change the low to 13.52. And if I hit enter, watch this number here. You can see that it goes from 3.57 risk to 7.48% risk. Now, I'm still only going to risk $500, but for that reason, I go from 950. I can only buy 458.72. So if I make this 450, you can see that that position sizes for me, and I maintain my original risk. Now, these down here are targets. If I get filled and it moves in my favor, my first target would be 1566, and I would realize $490, or paper profits anyway. The 2R, or the 2 reward, it would have to get to 1655 for $990 reward for the trade. Now let's go back to the other close stop, and once again the low was 1409 on this day, and you can see that it lowers these targets considerably, so the stock does not have to move as far to attain my reward levels. So that's how I use a spreadsheet. That's how I do my position sizing. This is one way to prospect. Just try to eliminate a long list of stocks by looking at the strongest stocks, and look for the stocks that are that have a good setup, and preferably with the group moving in your favor. That's it for today. I just wanted to share this with you, give you something to consider in the future.